This is VTI, one of the flagship Vanguard products covering the total stock market index with nearly $2 trillion in assets under management. Today we'll talk about why VTI has been such a great long-term investment and why so many people trust in this ETF to help make them everyday millionaires. Let's kick it off with VTI, the Vanguard Total Stock Market ETF, one of the most popular and widely respected ETFs in the world, and it's for very good reason. It offers a very simple, low cost, and gives you broad exposure to the entire US stock market in one package. I'm not going to say it's a small package, it's quite the big package, and we're going to give a breakdown of what makes VTI so compelling. We're going to get deep into this package. So for one, VTI gives total market exposure in one ETF. VTI gives investors access to the entire US stock market. This will give you companies like Microsoft, Nvidia, Apple, and it also gives you mid-cap workhorses, all the way down to small caps, which often do a lot of innovation themselves, and you probably never even heard of these companies. We're talking about over 3,500 different holdings with one ETF. So if you buy even a piece, a share of VTI, you in a way are an owner of over 3,500 of the best United States companies. What an honor that is as an investor, as a human, to know that you have ownership in the best companies out there. This is one of the most diversified ETFs on the market, and it covers all sectors and market caps. It captures growth, it captures value, it captures tech, it captures utilities, it has the mega caps in here, and it even has the underdogs. And it's all market cap weighted. So larger companies, they're still going to dominate the allocation of this ETF. About 90% of VTI is in large caps and mid caps, and only about 10% of the ETF is in small caps. You guys may have seen this, but there's an incredibly low expense ratio associated with VTI. It's just 3 basis points. That's $3 every single year for every $10,000 invested. This ultra low fee means that more of your returns stay in your pocket. I mean, this is a total bargain. You're paying somebody else to do all the work, pool all this money together for a measly $3 every year for $10,000 invested. I mean, that is insane. This is absurdly cheap. This is in line with other very similar S&P 500 broad-based ETFs. For example, the Spider SPY is 9 basis points, so that's about 3 times as more expensive. But the Vanguard VU, which is their S&P 500 ETF, that's also just 3 basis points. Now, I know these are all really small numbers, but people vastly underestimate how much expense ratios kill their returns, cost them tens of thousands, hundreds of thousands of dollars in the long run. Never underestimate how big of a deal a low expense ratio fund like VTI is. And of course, we have to talk about the strong record of VTI. Historically, VTI has closely tracked the performance of the overall US market, delivering solid, consistent returns over time. For example, in the past 10 years, it has given a mouth-watering 188% return. If we annualize that, that's about an 11.5% return, factoring in other things like inflation, etc. That actually slightly outpaces the S&P 500, which gave about 11.3%. Now, those are both amazing returns, but we have to remember that past performance doesn't always guarantee future results, but it might highlight reliability. This is a fund that can consistently just keep delivering great returns year after year. Now, before the whole world shut down in 2020, VTI actually often outpaced the S&P 500, and this was thanks to its small cap and mid cap exposure, those growth companies within this fund. However, in recent years, large caps have just destroyed, dominated the overall stock market, and that's caused VTI to lag a little bit. Now, I know you guys always want to talk about dividends. Talk about the dividends. And we will talk about the dividend income that you can expect from this fund. So right now it has a dividend yield of about 1.2%. We can see throughout time, it really doesn't fluctuate all that much. You can get around 1.7%. Could be an indication that the market is significantly overvalued if the price just continues to go up, but the dividends don't. You can see at its peak here around 2020, at the height of COVID, it was around 2.6%, which is pretty insane to think about. You can see over time, yield on cost, though, it will go up. So the longer you hold this fund, the higher your yield on cost is. Now, a very small 1.2% dividend yield is nothing to ride home about. But at the end of the day, this is a fund that you hold for growth, has consistently given gigantic returns with no NAV erosion, only capital appreciation. You're basically getting paid to wait every single quarter, and that's a great feeling. And of course, investing in VTI is emotional discipline and simplicity. Picking individual stocks, I know, it can be so thrilling. You think you're gonna find the next Nvidia, the next Tesla, the next Palantir even, whatever Wall Street bets is chugging on out these days. But the truth is, most people that are stock pickers, they significantly underperform the market. Investing is often, unfortunately, very emotional. People tend to have these human emotions. They often panic sell. They often buy high. They often sell low. And that just destroys returns over time. People need to also understand that markets are very volatile. Some stocks may drop 50% in a year, and that's really hard to stomach for some people. But with VTI, you don't need to guess the winners. They're already inside this fund. Think about it. There's 3,500 different individual holdings in here. The winners are in here, and of course, some of the losers are going to be in here as well. But every year, it's constantly getting rebalanced, reshuffled for the best 3,500 companies out there. This avoids the temptation to time the market, something that has been proven over and over again that no investor, no institution can do. And you're less likely to panic. VTI is a very sleep well at night investment. It's a swan. Sleep well at night. And if you don't believe me that the market is always changing, just think about it. History shows the top companies change basically every decade. In the 1980s, IBM was the top company. In the 1990s, GE or General Electric was the best company. In the 2000s, we had Apple. 2010s, 2020s, we've had Microsoft, Amazon, Nvidia. But there's no guarantee that these are going to be the top companies of the 2030s. What I'm trying to say here, guys, is that it's impossible to predict what the next giant might be. With VTI, you automatically own tomorrow's winners without having to guess. Heck, even MicroStrategy and Misty might be the top performers of the 2030s. The thing is, we just do not know. Now, I'm very doubtful that it will be, but I'm saying there's a chance. All right, so you probably want to know how VTI stacks up against the overall S&P 500. And they share a lot of the top holdings. You'll notice a lot of similarities between the top 10 holdings of the S&P 500 and the top 10 holdings of VTI. In fact, they look basically identical. However, there are some key differences. VTI has way more diversification with small and mid caps, while the S&P 500 is more concentrated in the large caps. We can see the S&P 500, the top 10 holdings, these are the big, juicy mega cap companies. They make up 37% of the fund. Well, when we look at VTI, that number is closer to 31, 32%. So that small difference does actually add up over time, and it's because of the small and mid cap companies, which the S&P 500 is way more concentrated in large caps, while VTI has more exposure to those small and mid caps. And that's important to consider some of the downsides, right? Small caps could potentially drag the returns. Since the 1970s, US small caps have often underperformed in both bull and bear markets. Now, during mega cap rallies like we've had in recent years, VTI's broader exposure can slightly dampen the returns compared to the overall S&P 500. Still, this diversification also means that you're less exposed to risk from any one company or sector. So, at the end of the day, should one invest in VTI or VU? Absolutely, yes, that definitely answers the question, right? The truth is, I'm going to be investing in both. They definitely have a lot of overlap, and they are definitely both ETFs that I could hold in my portfolio without question, I will buy into these every single week. I can sleep very well at night at any given time, no matter what the market is doing. And I know over the long run, the fund will give some great returns. There is no such thing as free money, but VTI, I have to say, this is as close as you can get to free money. A 442% return since it came out in 2001, not including dividends. I can't guarantee what's going to happen in the next 10 years, but I have a feeling the stock market will go up. VTI, the S&P 500, SPY, VOO, these are all great funds to have as anchors within a portfolio for total market exposure. It just leans into large cap dominance, and this strategy spreads out the risk while still capturing the growth of America's strongest companies. Listen, VTI might not be flashy, it's not going to triple overnight, but it's dependable, it's diversified, and it's designed to grow your wealth steadily over time. In this world of hype and hot dogs and hot stock tips, VTI is the antidote. It is a boring, beautiful engine of long-term cow pounding. Cow pounding! As Jack Bogle, the founder of Vanguard, once said, "Don't look for the needle in the haystack, just buy the haystack." With VTI, you own the haystack, and that's more than enough. If you enjoyed this video from a small-time creator, please hit that like button. Leave a 5-star review if you're listening to this on podcast form. Let me know what you think about VTI in the comments below. If you want to see my full $270,000 plus portfolio, make sure you check out the Patreon link below. I post all my weekly trades in there, and I will catch you on the next one.
If you don't want to make money, that's fine. Then get out of here. Let us make money. We know how to make money. No, because the reason you're asking this question because you fail to suspend the belief.